don't really need to understand taxes. There's other people that can do that for you. That's cap. There's no chance. If you understand how the system works, you will know how to play the game. Here's how it works. When you have revenues and you subtract costs in any business, that creates what most people would just call profit. Revenue minus cost, that's profit. That's my bottom line. There's a term for that. It's called EBITDA, earnings before interest, taxes, depreciation, and amortization. Now let's break that down. First, once you have your EBITDA, your profit, as some would call it, you can subtract amortization. Amortization is essentially the loss in value of non-tangible assets, such as a patent. Yeah, the patent loses value as it runs out of useful life on the patent. Copyrights, trademarks. You can amortize the value those have lost, basically deductions against your taxable income. Then, once you've amortized, you can depreciate physical assets. Yes, you can depreciate vehicles. Yes, there are ways to depreciate homes. Yes, there are ways to depreciate machinery, right? Those use what's called a maker's table. This is a longer conversation. We're not going to go down that. But the idea is after you amortize, you then can depreciate your assets. Then you can take off what's called interest. Interest is, hey, I made X amount of dollars for the year, but hey, on my home that I own, let's say my mortgage is $4,000 a month. Let's say $1,000 goes toward principal equity, $3,000 goes towards interest. What that would mean is you would have $3,000 each month times 12 months toward interest. As an individual, an appreciable asset owning a home, the interest paid toward it is a tax deduction. That's right. When you own a home, the interest that you pay toward that house can deduct from your taxable income, and you can get tax reimbursements if you're W-2. Now interest has been taken off. Now we take off taxes. So now that we've amortized, depreciated, and removed interest from our EBITDA, our profit, now we can now you're paying taxes on what's left. The goal is to minimize that number. Once you pay taxes, you're left with what's called your net income. Don't forget, teaching is what I do.